What's up, YouTube? What's going on, CCI family? It's your main man back with the game plan. Yep, once again, because you already know I can't leave you out there too long without that information or that education. You feel me? So look here. Today, we're stepping outside the normal headlines. We're jumping into the markets that most investors overlook. Okay? Now, emerging markets are heating up. Capital is shifting, and the winners that you thought would be the big ones just might not be. Grab your pens and pads. Let's go. Take a look. All right. To kick things off, we're going with a sleeper. A sleeper that has been building a monster footprint in the market. Okay? Now, to get it right, you're going to have that in you. Okay? If you ain't got that, you might not be able to say this right, but it's Arcos Dorados. You feel me? Arcos Dorados. All right? So Arcos Dorados Holdings, ticker symbol ARCO. And this company is the largest independent McDonald's franchisee in the world, operating over 2,500 restaurants in 21 countries, both in Latin America and the Caribbean. Okay, and it doesn't stop there. They're not stopping there. Okay, don't even get it twisted at all. The thing is, in 2026, they're planning to open another, it was 105 to 115 more new locations. Now, this is all backed by a $275 to $350 million investment into the expansion and modernization of their company. All right. Now here's the kicker though. Arco is trading at just under $8 a share right now. That was at the time of my research. Okay. And their PE ratio is under $7. Now, if you know, they're screaming nothing but value. Okay. Now, analysts are giving it a modest price target of about $8.60 a share. But if Latin America's recovery picks up steam, they could leave that in the dust. So for my long-term investors out there who are looking for exposure to emerging markets with a proven brand, Arco might just be your golden arches, let's say. You feel me there? Okay. Next one. All right, so next up, we have what I can plainly call a digital banking powerhouse, okay? That's rewriting rules across all of Latin America, all right? And that is Nu Holdings, ticker symbol NU, okay? Or Nu Bank, all right? Nu is the largest fintech bank in all of Brazil, and they're expanding fast across Latin America with a clean, mobile, first banking model that most banks can't even match. They've already crossed 90 million customers, and their growth curve still looks ridiculous. All right. Now, the stock's sitting currently around just under $19 per share. Okay. But it's still up 44% in the last year. Light bulb, right? And even though this has occurred, analysts are still calling this a buy. Another light bulb. Okay. Now, they have targets ranging from $16 anywhere to $22 per share, depending on how aggressive you want to be. Now, this is the truth part for me. This is one of those stocks that I could actually kick my own, you know what, for, because I had this on my radar like a year or more ago. Had the research done, had it on my notebooks written down, and never pulled the trigger on it. Okay? So looking at where they are now, though I had them on my radar, and watching it run like this since then, yeah, well, let's just say lesson learned. You're always learning in this game. Okay? So, but the good news is the story isn't over. Nu isn't just a bank. Okay, it's a tech company with a banking license and it gives you a massive edge in the emerging markets, which we are covering today. All right. So if you're looking for exposure again in digital finance, revolutions, Latin America, new holdings is absolutely worth your look. Let's keep it going. All right. So now stick with me here. Okay. Before we jump into our third and final pick, I'd like to bring on somebody who knows emerging markets better than most anyone. He's a specialist in emerging markets. His name is Raj Malhotra. Okay. Now, this is his first time on the show. However, every conversation I've had with this guy off camera makes you rethink your whole strategy, you know? All right. So, Raj, are you with us?
I'm here, Vince. Appreciate the invite. I've been watching the same trends you've been highlighting, and there's a lot happening under the surface in emerging markets right now.
Okay, so Raj, before we get into our last pick, give my viewers some sense of what you're seeing out there right now. What's the real story behind the emerging markets? And what's the biggest shift investors should be paying attention to?
Great question, Vince. So here's the real story for 2026. Emerging markets are entering a stronger phase than most people realize. The IMF's latest projections have emerging and developing economies growing around 4% this year, which is more than double the pace of advanced economies. That growth gap is widening again, and historically, that's when equities start to outperform. What's interesting is that a lot of the weakness from the past few years, especially from China, has already been priced in. But when you look at the broader universe, earnings expectations for 2026 are actually improving. Analysts are projecting solid EPS growth across Latin America and Southeast Asia, and that's where investors are starting to rotate capital. When you look more closely at the regions connected to the names you've highlighted today, the picture becomes even more interesting. Within emerging markets, Latin America is seeing steadier inflation and healthier consumer activity, while Southeast Asia continues to move forward in areas like digital services and fintech. These are longer-term developments that go beyond short-term market noise. That leads to a broader theme for 2026. Many emerging economies appear to be gaining momentum again. Companies involved in payments, consumer activity, and regional expansion are positioned to participate in that environment. So Vince, based on everything you've been tracking, I'm curious how you see it. Are people starting to pay more attention to these trends? Or does it still feel like the market hasn't fully recognized them yet?
Well, you know, to be honest, I always go back to this book I read years ago. It's Emerging Markets for Dummies. And listen, to all my viewers, never sleep on the For Dummies books, okay? They're packed with powerful information if you actually take the time to really dig in. But that book breaks down just how important emerging markets really are, how impactful they can be on a global growth scale, and what you should be looking for when you're researching opportunities. And everything I'm seeing right now lines up with those fundamentals. Okay, personally, I think this is a sleeping giant, like I said before. One that some investors are paying attention to, but really not enough. Okay, institutional or retail. A lot of people are still overlooking what's really happening in the emerging markets right now. And honestly, once a couple of big announcements drop, they're all coming. And you know that. Okay, a lot of folks are going to wake up real fast, and that's exactly why I'm putting my viewers on early. Y'all, okay?
Absolutely, Vince. And just to sum it up, 2026 is shaping up to be a year where the strongest emerging market players finally separate themselves from the rest. The companies with real scale, real users, and real momentum behind them are the ones investors should be watching closely. I've really enjoyed being part of the show today, and I appreciate you bringing me on. This was a great conversation, and I'd be glad to come back anytime. I know you're about to dive into a company you've followed for a long time, so I'll step aside and let you take it from here. This next pick is one your viewers definitely need to hear about.
All right, now let's wrap this episode up with a company I've talked about many times before on this channel, okay? And that is Grab Holdings, ticker symbol GRAB, okay? If you've been rocking with me for a while, you already know this is one I've followed faithfully, okay? And honestly, the story just keeps getting better with Grab. Okay, Grab is still one of the most important players in Southeast Asia's digital economy, period. Through ride hailing, food delivery, payments, logistics, they've woven themselves into everyday life across the whole region. Okay. All right, so now let's talk numbers. Okay, Grab has been showing some real strength lately. As of January 6th, the stock was up 4.32% in a single session. Okay, catching attention across the market and sparking like new conversations about whether this is the beginning of a new longer term move upward or not. Okay, and as of lately, the stock is trading around 456 up and down in that range. Okay, now it's not explosive yet. Okay, we've been above this before, of course, but it is steady, and more importantly, analysts still see upside in this stock. All right. Now, speaking of analysts, the sentiment is overwhelmingly positive still with this stock. Out of 9 analysts, I believe it's 8 that rate Grab still a buy. Okay, and 1 is rating it a strong buy. All right, so that's kind of rare for any emerging market tech stock at all. But it tells you that the professionals see long-term potential here, okay? Even if the price action is slow at times. All right, so now here's the big story, okay? Or the big storyline, okay? This is the one that could shake up the entire Southeast Asia tech landscape, period. Okay, Grab is back in talks with GoTo. Now, you remember GoTo from previous videos that I did before. I was all hyped up about this deal going through, but it kind of stalled out, as we all know. Okay, but if this goes through now, it will be the biggest digital economy shakeup in Southeast Asia in many, many, many years. Okay, the proposed valuation even includes a 20% premium for GoTo shareholders, which is a plus. You feel me? And they have new heads of the company of GoTo that are more open to this merger as well. Okay. Now, why does this matter? Because a merger like this would cut costs, it would reduce price wars, and create a dominant regional force across the whole ride-hailing and delivery and fintech for the whole region over there, for the whole of Southeast Asia. Okay. Now, again, yeah, attempts at this deal failed and got stalled out before, but the fact that they're talking again and they're active again shows that both sides see the strategic value in this merger. Okay. And to tell you the truth, this is why I've stuck with Grab. Okay. They're not just like a ride-hailing service. Okay. They're building an entire infrastructure for how millions of people move, eat, pay, and shop. The fundamentals are improving. The stock is gaining momentum. Analysts are bullish. And the GoTo deal, if it lands, you already know, it could be the catalyst that finally pushes Grab into the next phase of growth. And that's what we're all looking for. Okay, and the reason I'm bringing them to you and continuing to bring them to you, look at where their price fluctuates between. We've been in these 450s before. We've been over the $6 range. Some analysts still see them as $7, $8. If this deal goes through though, okay, so I can't tell you whether to buy, hold, or sell, you know that. But I would myself continue to load the boat on this stock at this price, because when it gets to the others, you're sitting pretty, if you feel me. So if you are looking at emerging markets and you want exposure to a company that's still early in its long-term story, Grab is one I continue to watch closely. Okay, I've said it before and I'll say it again. This stock has the potential to surprise everyone who's just looking at the short-term charts. Okay, so again though, just remember, investing always comes with risks. All right, so do your own research, as I say, your due diligence, And if needed, always consult a financial advisor in your area. All right, let's wrap this up. All right, CCI family, that's what I got for you this week. I want to thank you all for rocking with me as always. Miss Yvette will still be back. She took a little extra time with the family. I told her, go ahead, we got this, you feel me? So, as usual, I want to wish you all a blessed and financially successful week ahead. And if you've learned anything today, if it was educational or useful to you in any way, please don't forget to hit that like and subscribe, and please drop a comment, okay? It helps the channel and it helps me to help you even further, okay? I want to know the stocks that you are invested in, if any, and so we can bring them to the channel and to the family, all right? Thank y'all again. See y'all next week.